First effect is in it should be deducted from creditors as reserve for discount in balance sheet liability sides. The second effect is to be added to discount received in profit and loss account credit side. Now let's view in tabular format. So as I say, the first effect in balance sheet as on liability side subtracted from creditors and the amount left should be returned in outer column. The second effect in profit and loss account for the year ended in credit side by discount received added the amount discount on creditors. The total is to be returned in outer column. Further, we move on 10th adjustment, which is depreciation on assets. So this adjustment is very important because this is always asked in question whether on one asset or more than one assets. So the basic meaning of depreciation is the values of asset is getting lowered. So its first effect is in profit and loss account debit side, which is also known as PD in my words. The second effect is it should be less or deducted from particular asset written in balance sheet asset side. Examples of depreciation. Depreciation can be deducted from furniture, land and building or building, machinery, loose tools and motor van, etc. These are the assets which may get depreciation. So now let's view it in tabular form. So first effect, that is profit and loss account for the year ended debit side. These are the assets which can be depreciated. So if only one asset is being depreciated, so we directly write it as to depreciation on furniture and the amount of depreciation is to be written in outer column. But if there is more than one asset is being depreciated, then we write to depreciation asset 1 furniture, asset 2 building. Then we do the totaling of depreciation and write it in outer column as shown like this: machinery, loose tools, motor van, total in outer column. Second effect in balance sheet as on asset sides. So furniture, amount of depreciation subtracted and the answer written in outer column. Sometimes in question amount of depreciation is given, and sometimes the question gives the percentage, that is if the amount of furniture is 200 and we the depreciate 10% of 200, then we write the amount we depreciate 10%, then we write the amount and get subtracted and is to be written in outer column. Like that, all assets is to be depreciated. Further moving on 11th adjustment, that is interest on capital. So when such question such adjustments are asked, then it's important to create partner's capital or partner's current account. So so that we get the sum easier. It makes the sum easier. So its first effect is in profit and loss account debit side as interest on capital. Then the second effect is in partner's capital or current account in credit side. So CC. In table view, it is shown like this: interest on capital. If A and B are the partner, name of the partner, so A have this much interest, B have this much interest, we add them and write the total in outer column. If there is only one partner, which receives interest on capital. So interest on capital A, or A's interest on capital, write the amount in outer column. Second effect in second effect in partner's current account is by interest on capital. The amount of interest which is on A's capital account is to be returned below A, and B's interest to be returned below B. 12th, interest on drawing. So same way, this also have effect in partner's capital or partner current account. So it is also important in this adjustment, it is important to create partner's capital account or partner's current accounts. So second effect is in profit and loss account credit side, that is PC. So let's see in tabular form. First effect in partner's capital or current account, that is to interest on drawings written below the particular partner's name. Second effect in profit and loss account for the year ended by interest on drawings, writing the name of two partners, that is A and B, adding their interest and writing the total in outer column. 13th adjustment, interest on loan taken. Here also it has two effects, that is profit and loss account debit side, and second effect is to be added in loan taken in balance sheet liability side. Here is the tabular view. First effect, profit and loss account for the year ended, debit side to interest on loan taken, writing the amount in outer column. Second effect, balance sheet liability sides, adding to the loan taken and writing the total in outer column. 13th, it is interest on investment and on loan given. Two effects, balance sheet asset side and profit and loss account credit side. So first effect in balance sheet asset side, it is interest on loan or investment, interest on investment or loan given, writing the amount in outer column. And in second effect in profit and loss account for the year ended in credit side by interest on investment or loan given, writing the amount in outer column. Further moving on, 15th adjustment, that is goods lost by fire and insurance claim. Very important because it may have three effects. So first effect is in balance sheet asset side as insurance claim. Second effect is in profit and loss account as loss in debit side. Third effect is in trading account in credit side as goods lost by fire. So let's view it in tabular form. So the first effect, which is in balance sheet, it is written as insurance claim. The amount of goods lost claimed by insurance company is known as insurance claim, and that amount is to be returned. Second effect, which is written in profit and loss account debit side, is loss by fire. The amount which is not claimed by insurance company, we'll see how it is calculated later. Third effect, which is in trading account credit side, is buy goods lost by fire. So yes, now how the loss amount is found. So here we need to write a working note, that is loss is equal to goods lost by fire, that is the amount, total amount of goods lost by fire, minus insurance claim, the amount insurance company have given back. So subtracting this, will find the amount of loss. Further moving on, 16th, that is uninsured goods lost by fire. The first effect is profit and loss account debit side as loss, we write it as loss. Second effect is in trading account credit side as goods destroyed by fire. Tabular form, profit and loss account debit side to loss we can bracket में लिख सकते हैं हम by fire, because it is better if you mention which loss is that. So this is the first effect. Second effect is in trading account credit side, which is by goods lost by fire. 17th, goods stolen, goods चोरी हो गया है. So it is basically loss because no one has been paying to us. So it is loss for the company or for the business firm. So its first effect is in profit and loss account debit side as loss. Second effect is in trading account credit side as goods stolen. So let's see in tabular form. This is the way in which we write. Similarly, like uninsured goods lost by fire, where we give its one effect in profit and loss account debit side to loss by fire. So here instead of loss by fire we write as goods stolen in bracket. Second effect is in trading account by goods stolen, amount returned in outer column trading account credit side. 18th, it's goods distributed as free sample. Sometime if you have noticed in magazine or newspaper you get the pouches of shampoo which are newly launched, that is for the advertisement purpose, so it is not loss for the firm. So its first effect is profit and loss account debit side, which is returned as advertisement. Second effect is in trading account credit side as good distributed as free sample. Tabular view is of first effect is in profit and loss account for the year ended debit side to advertisement amount in the outer column. Second effect trading account for the year ended credit side by goods distributed as free sample amount in outer column. 19th. So the main motive of showing everything together is better if you will learn it step by step looking at the book table. So goods withdrawn by partner for personal use. So this is when some partners withdraws the goods from business firm for his personal use. So its first effect is in partner's capital or current account. Here the partner's capital or current account is compulsory to be made. So in that account we write in debit side as drawings because he's drawing the goods. Second effect can be written in two ways. So the first way we write second effect is trading account credit side as good withdrawn. So here we can write the name of partner who is withdrawing. Suppose if A is withdrawing, so good withdrawn by A. Or we can also write it as we can less the amount of goods withdrawn from purchase in trading account credit side. So tabular view, I think it will be very clear. In partner's current and capital account, two drawings below the name of particular partner. Second effect in trading account credit side by goods withdrawn by partner, amount in outer column. Or second effect other way of writing is in trading account debit side, which is deducted from purchases and the leftover amount is to be written in outer column. Further moving on, 20th, unrecorded purchases, that is you have purchased in accounting year but it is not mentioned in any of the account, which is also known as unrecorded, is not have been recorded. So two effects are, we add this to purchases in trading account as unrecorded purchases, and second effect is we add to debtors in balance sheet same as unrecorded purchases. So here is the tabular view. First effect, in trading account debit side, purchases we added unrecorded, sum we write in outer column. Similarly, in second effect, in balance sheet, we added to debtors as unrecorded purchases, and the sum is to be written in outer column. Further, moving on, 21st adjustment, that is unrecorded sales. Similarly, as unrecorded purchase, here we forget to write the sales, so it becomes unrecorded sales. So its first effect is to add to sales which is in trading account credit side as unrecorded sales, and second effect is add to creditors in balance sheet as liability side. Tabular view says that trading account for the year ended, first effect which is to be added unrecorded sales to sales, and the total is to be written in outer column. Second effect, in balance sheet, in liability sides, unrecorded sales is added to creditors and the total amount is written in outer column. Bills receivable dishonored. Bills receivable is also written as B/R. So it also has two effect, that is two effect in same statement, which is in same column of balance sheet. The first effect is add to debtors in balance sheet asset, and second effect is less from bills receivable in balance sheet asset side. Now let's see this. So here first and second effect is in same statement in balance sheet, so its first effect is to be added from debtor in debtors. So debtors plus bills receivable dishonored, total written in outer column. Second effect, less from bills receivable in balance sheet asset side. So bills receivable minus bills receivable dishonors. So the leftover amount in outer column. Similarly, in adjustment 23rd, which is bills payable, which is also known as B/P, dishonored, also have seen base, that is first effect in which is less from bills payable in balance sheet liability side, second effect add to creditors in balance sheet liability side. So same one statement, bills payable, subtracting bills payable dishonored, leftover amount written in outer column. Second effect, creditors, in creditors we are adding bills payable dishonored, the sum is written in outer column. 24th adjustment, capital expenditure included in revenue expenditure. So it is first effect, add to the particular asset in balance sheet asset side. Second effect is less from particular revenue in trading account debit side. So here I'm not giving you any tabular view because I think if I'll give you an example while teaching the sum, I'll give you in tabular form right now, you'll get confused. So we'll see this adjustments while doing sum. 25th and adjustment, we move on. Revenue expenditure, which includes in capital expenditure, which is included in capital expenditure. Two effects. First effect is add to the particular revenue and less from particular asset in balance sheet asset side. Next, 26th, that is deferred expenses of advertisement paid for 5 years. It is also referred as hidden adjustment because there are many hidden adjustment on rent, adjustments which we'll learn while doing sum. Two effects. First effect, adjustment related to current year is to be written in profit and loss account debit side, and second effect is in balance sheet asset side as prepaid advertisement. Further moving to 27th, which is revenue receipts included in capital receipts. Two effects. First effects, add to the furniture. It is, I think, first effect, add to the furniture in balance sheet asset side, and second effect is add to the sales in trading account credit side. Note: here there is one thing to note, that sales of goods is included in sale of furniture. 28th is commission to partners as percentage of gross profit or sales. That is, partners is getting commission. So two effects. Effect one, profit and loss account debit side, and second effect is partners capital account or current account credit side. Because it's partners commission, so it should be returned in partners capital account below the name of particular partner. So here I end my presentation to you. I hope it is helping you to learn adjustments. Now in next video we'll see 12th standard Maharashtra State Board exercise question solution. So thank you for watching, hope you like, and for any queries you can contact or you can ask your doubts on this email ID. I will surely try my best